Hi, this is Avi from Contractors. We do accounting, bookkeeping, and QuickBooks for builders and the skilled trades. And one of the most common needs we have with our clients is helping them manage customer deposits. Prepayments, retainers, they all essentially mean the same thing. Taking money upfront with a promise to do X in the future. And so tracking this money is really important for the business because if the work never gets done, well, then the business needs to pay that deposit money back to the client. With that in mind, that deposit money stands as a liability to the business. If the work doesn't get done and it needs to be given back, we haven't earned it yet. And so tracking the liabilities is really important for any business. When it comes to builders, it's really important because you might be taking deposits from numerous businesses, and be able to track that money becomes very important as the business becomes more complicated. So in QuickBooks, there is a deposit taking feature that works well for businesses that don't take deposits often. But we've found that working with our clients, we need a more structured process to help them better manage and give greater insights into the money they've taken deposits from their customers and allow us to report on it to be able to quickly learn who we've taken money from, how much, when, and how much of that deposit money we've already applied to invoices, if at all. So the process we're going to go through today is to show you how to go about setting up the various accounts and also products and services to be able to do this. And then we'll walk you through the process of being able to check to see where you are in the deposit making process for each of your clients. We're using today the sample company provided by QuickBooks Online. It's called Craig's Design Landscaping Services, and it's a great place to mess around with different workflows without affecting your books. So if you want to practice this in the sample company, you can go ahead and do it. We'll have a link in the show notes so you can get to this, what they're calling a test drive there. First thing we're going to do is set up the chart of accounts for this deferred revenue account, excuse me. And I've already checked, there is no deferred revenue account yet in the sample company. We're going to call it customer deposits, deferred revenue. And that's helpful. So if you have your CPA, EA accountant looking at your books, it's pretty clear. They know what it is. Account type, as I mentioned, is a liability. We haven't earned the money yet. And QuickBooks has already determined for us, it's realized this deferred revenue account, and it's auto-included that in the details type. Go ahead and save. So the first part of this is now done. We've created an account in the chart of accounts for customer deposits. The next step is to make a product and service for this so we can apply it to an invoice. Sales, product, and service. We're going to create a new service item. We're going to call it deposit request. And even though this says income account here, income, liabilities are two separate things, but we can still find that account in here as well. Customer deposits, there we go. Save and close. And we'll see deposit request. So there's going to be two different transactions involved when we're requesting money from a client. So we're going to be requesting money from the client for the deposit. But then at some point in the future, we're going to put together an invoice with the products and services that we've now delivered to the client. We want to then apply those deposits to the invoice. So we need to create a product and service for that as well, one for deposits applied to the invoice. If this isn't clear, it will be towards the end of this video. I'm going to call this deposits applied to invoice. Clear enough. And again, income account, and we're going to choose that same deferred revenue account. customer deposits. Save and close. So now we've got the two different products and services here, deposit request, deposits applied to invoice. Let's do the next step in this process. Let's go and find one of Craig's current customers and put together an invoice requesting them for a deposit for future work. Plus new button, invoice. And we'll just take first one here, Amy's Bird Sanctuary. And we'll do this for about a month ago. Products and service is deposit request. And this is for future design work. And we're going to take $5,000. And not taxable. And save and close. So we've created the invoice for Amy, requesting $5,000 for deposit. Amy has gone ahead and written us the check on the same day. Check, amount received, $5,000. Okay. Recording closed. So let's go see, before we do the next step in this process, let's go check out the chart of accounts and see where that money is for the deposit. Go over here, chart of accounts, and we're going to look for customer deposit, type it in. Let's go and view register. And we see here, we've requested, Amy's made payment. We now have a balance of $5,000 in that deferred revenue customer deposit account. Fantastic. So let's say a month has passed. We've now done the work and we want to invoice Amy for the entire project and then apply that customer, that prepayment, the deposit to the invoice. We're going to create a new invoice. We're going to date it today for customer Amy. And we've done some design work. We've done 100 hours of design work. So if you remember, we've taken $5,000 from Amy. We've done 100 hours of design work at $75. We're now going to apply her prepayments to this invoice. On the next line below, we're going to find deposits applied to invoice. And we know we've taken $5,000. What we do here is we include that $5,000, but we make it a negative sum. And you'll see here, 7,500 less 5,000 gives us $2,500. So including this $5,000 essentially does two things. It removes the $5,000 from the invoice for the design work, but it's on, and it's shifted now $7,500 to Amy, to Craig's revenue, but it's also taken the $5,000 that was in deferred revenue, shifted it to income. And we'll take a look real quick at the chart of accounts after I go ahead and save this. So Amy now has an outstanding balance of $2,500 after we've applied the deposit to it. And let's say that she's gone ahead and made payment here as well. As you can see, the outstanding balance is just $2,500 because we've already applied the $5,000 to it. Okay, recording close. And the last step in this is, as I said, to go back into the chart of accounts and the deferred revenue account is still pulled up here. I'm going to go in and we'll see. Here's the request that was made for $5,000 from Amy. Amy paid that $5,000 to Craig. Craig did a month's worth of work for design, created an invoice of $7,500, applied her prepayment to the invoice with an outstanding balance of $2,500. And then we can see here that there's an ending balance of 0 in that deferred revenue account. So that's a quick process by which we can go ahead and create, build out our chart of accounts so it correctly can track customer deposits. As we add more customers and as we take more deposits, going through this process and having a standardized way to be able to track that deposit money becomes really important. And of course, it'll make your life a whole lot easier too. Thanks for being with me. I hope you have a great day and best of luck with your business. Bye now.